virtual program on accounting for digital assets. To have this program, we have with us renowned faculty Asha M and Manik Bansal. I'm really happy because I took over as chairman on 21st, that is on Monday. This being the first virtual meeting, we have with a great speaker Asha and Manik Bansal. And first of all, I thank all the members, those who have supported for consecutively 3 terms and electing me and making to take over as a chairman of this prestigious branch, largest and vibrant branch in India. I'm really happy and thankful. And I also commit that I'll do my best, whatever the responsibility you have given, with utmost dedication. And also I want to bring to your notice that last 2 years we couldn't do much physical programs. We did lot of virtual programs. Our predecessors, Mr. Ravindra Kore, BT Shetty, everybody done a fantastic job even during Corona, COVID pandemic. They did a fantastic job conducting lot of virtual program. But this time my responsibility has become increased because once pandemic is over, physical sessions are started. Generally, even I believe that members will enjoy physical sessions because learning together with fellowship with the members, it's very important. Last 2 years didn't happen. In my turn, God's grace, now it is opened up. We are planning to do a lot of physical programs. I seek all the members' cooperation in this regard. In fact, Monday when I took over, second half, we had a physical program on revised schedule 3, interplay with Karo. This session is done by great speakers like MP Vijay Kumar and Gururaj Acharya, and it has been well received by the members. They really enjoyed it, went on very well. Instead of 3 hours, it went on for 4 hours program. It shows the keen interest of the members to join for physical program. I once again request all the members to join for our physical program. Upcoming, we have a fantastic program on March 2nd. We have a key journal entries and workings on India's standards. After that, March 19th, we have a bank branch audit physical program. I request member to join for this program. With this, I don't want to come in between the speakers and members. Very eager to listen to their speech. I don't want to come between. Anyway, I thank both the speakers and happy learning to you all. Over to our Secretary Pramod Hegde.
Thank you, Chairman, for the opening remarks. I feel privileged to introduce Ms. Asha M, who is currently working at EY as Director in Financial Accounting Advisory Services. Asha has been part of a large investment bank for a period of close to 2 years, and she has assisted them in preparation and finalization and work and review of complex hedge and fund financials with respect to US GAAP and state GAAP, various other things. She is also the member of ICSI and ICMI, cost accounting as well. She has secured 40th rank in All India CA Intermediate exam and first rank in Karnataka CA Intermediate exam. She has been felicitated with Late Sundar Raja Endowment Award by ICSI as well. And also we have Mr. CA Manik, who is working with Ernst & Young, specialized in financial sector, and is very passionate about the fintech trends. So with this, I would like to hand over to the speakers of the day. Thank you. Please, Matt.
Asha Madam, you can take over. Over to you.
Thank you, sir. Thank you. I think it's been 2 years, but we've still not learned the art of unmuting, actually. We should remind ourselves to unmute and speak. Yeah. So I was just saying I'll share the screen. Please let us know if you can see the screen. Is it visible, sir?
No. Now yes, it's visible.
Now you can see it. Okay.
Yes.
I sincerely want to thank ICI Bangalore branch for providing this opportunity of speaking on a topic which I don't think so there's even a standard setter in India have thought about it to write. I'm sure there's a discussion in progress, but there's no particular standard or a guidance which is out. And that kind of shows how the Bangalore branch thinks ahead of times and talks about areas which are going to be future required required for future businesses. And Srinivas sir, thank you so much for giving this opportunity. And I think I'm really privileged to be part of institute programs for now years, I think 1 decade almost. It kind of feels always honored and privileged to be part of ICI Bangalore branch. And I also congratulate all the managing committee members for electing for this year. And I wish you good luck for the entire year. And Srinivas sir, congratulations to you too on being a chairman. We look forward a lot
Thank
of
you, madam.
great events.
Thank you. I seek your support also.
Absolutely, sir. Thank you so much. So with that, we can start on accounting for digital assets amongst myself and Manik. We will have this flow of discussion. Before we really go to the topic and what we want to cover, Srinivas sir, I think what I really wanted to set the stage is that why this topic? We generally have a question that not too many transactions are really happening amongst our circle. Right? Maybe not too many of our clients are getting into it, but it's not too far away, right? With the budget announcing virtual digital assets taxed at 30% of the rate and also having a withholding tax of 1% on the VDAs, of course, effective 2023. But the announcement is calling out more interest amongst the people that everyone now wants to know what actually is the virtual digital asset. What do we mean by digital assets? Right? There's a lot of curiosity. In fact, the curiosity is so much so that I keep hearing people during all of this festive seasons that are going to come up, right? I've been hearing people asking me, what do I gift, right? Which land do I gift? Which apartment do I gift? So me and Manik were talking about it. It's very interesting the way the word is evolving. So I was just telling Manik that I bought the entire apartment, the entire 7 acres of apartment, and he mentioned how come. So I said it's all online, right? It's all virtual space. We go to Decentraland, we go to next Earth.io. There are virtual websites that have created the virtual land in a metaverse platform, and that's available for. I mean, you'll be shocked if I say I paid 5,000 rupees to buy 7 acres of a land virtually. Now, what do I do with it? I'm really not sure. Does it going to earn money? Not sure, right? Will it have capital appreciation? Not sure. But is it fun? It was just fun. It was more fun that we just bought an asset. I have a land. I own a huge digital land at this point of time, and that just gives some satisfaction. And I can now gift this land in parcels to the friends as well. That's kind of a trend amongst the youth right now. They're buying digital assets, they're gifting, they're exchanging, they're transferring, they're exploring what's happening in this world. And that's why I think this topic is very prevalent for us to at least know where we are heading in the whole world of DeFi and digital asset space. That's one point I think I want to bring, that why do we really as members need to just have some very high level understanding of what are the accounting requirements for this digital assets. The second is the Bitcoin, which we call it as gold of coins today, right? So we've been hearing for Bitcoin for a long time, and the process through which the Bitcoin came is also called as mining. And I think very closely people are saying that it is actually a gold of DeFi world, like the way we have gold as a commodity, it's a gold in the entire digital space. And no wonder why Bitcoin can be used to buy any other coins that are available today. It's used as a medium of exchange to buy goods and services. There are companies which are taking, instead of cash, they're ready to accept Bitcoins or maybe more prevalent coins for as a consideration for the revenue that they want to earn. So with that being there, we see a lot more startups emerging in the coming months that will enable us to use digital currency as a medium to exchange, right? It becomes it will definitely not replace cash, never, right? Probably not so soon that we could imagine, but it will definitely become a medium of exchange. I can actually exchange my coins and buy anything. I can probably buy flat, I can buy a car, I can buy goods. There are hotels. In certain hotels, they already started accepting digital currency. In fact, in Bangalore, there was actually I think a cafe that was opened with all the names related to currency, and people are very fascinating about this entire concept of digital currency and digital assets. And that's why I think this topic is very prevalent. The way I think I want to set this context is I am neither Manik are experts in mining, right? Neither we're experts in currency trading. If you ask us any questions on which currency is good, what to trade, etc., we have zero answers. But what we have learned over the period is while researching about this topic, we learned even the accounting requirements are very unique. They're very interesting, actually. Just the fact to understand how to recognize a digital asset, it was like a journey for us to just go through and figure out what is digital asset all about, whether it's an inventory, whether it is a fixed asset, whether it's an intangible asset, whether it's a financial asset, whether it's a monetary asset. I think those are all the questions in mind, and we will find answers to those questions during our session. And how it will be helpful to our members is as we evolve in this space and many startups evolve in this space, understanding the jargons related to crypto world is definitely helpful for us. We may call the same fee probably used in a different language, and that's what I think we should know from an accounting language, that it's a transaction fee but not called as transaction fee, maybe called as gas fee, right? It is probably a non-cash consideration. I'm just distributing the coins, but it is actually called as airdrops. I think those are the jargons which are making this concept of a crypto and digital assets probably a far more not reachable. But I think if we start deep diving, we understand these are just the terminologies of the new age word, right? And people will be able to appreciate once they start reading about this more. So that's the background. We would not deep dive into blockchain as a technology in this next 2 hours. We will not deep dive into what is distributed ledger means. We will not really deep dive into what is the technical aspects of that blockchain technology, but what we will deep dive is the accounting aspects of digital assets. To set the context of accounting aspect for digital assets, we would look at just broadly what are digital assets, what are the components of digital assets, what is the ecosystem around which the digital assets gets traded or maybe purchased, right, or transacted, and that will be like a foundation for us to move to the accounting space. So said that, I think that's kind of a stage for us. The whole concept of digital assets is on account of an evolution of fintech, right? So fintech is not actually a very rocket science term. It is nothing but a financial technology. When the technology was started to be embedded in the financial services sector and people started using technology very vastly to make the banking transactions, insurance transactions seamless for customers, that's where the word of fintech evolved over the period of time. Today, all of us are so comfortable using phone pay, right? Google Pay, Paytm. I think we have thousands and thousands of apps which are helping us to transact money, to transfer money. I mean, I kind of feel so surprised about the way India, after entire demonetization and after I think the government's push on the becoming a digital economy, the way I guess the entire economy has moved. Every small vendor today can accept the Google Pay, right? Everyone has got a digital pay enabled. They don't know the technology behind it. They absolutely do not know how it works, but just the smartphone, they have a smartphone which enables them to use it and they receive money today. Today, I think when I go out, I'm sure all the industries which are manufacturing the bags and wallets and those fancy, I think, all the things that which we used to sell earlier to carry cash, nobody's carrying cash. I remember I went to Mysore last time with the family and we just took phone. We just didn't take cash. We realized everywhere it was acceptable. Everybody was accepting the Google Pay. I think everybody was accepting the digital pay for that matter. And that's the kind of evolution India has gone through. And that was possible only because of the fintech evolution. So how fintech evolution all started, right? It all started, I think, very, very way ago. 1967 is when we had a first ATM. Just to understand the concept of ATM, I think took some time. We never knew that you can get anytime money. You can just get midnight also, the money that you want. That was not something which people could imagine, but it got revolution in the whole field of accessing the finance by people. And there was a digital stock exchange in 1970s. I think 1960s were the evolution area for making people accessible to finance. 2008, I guess, took complete turnaround in the financial services sector after the big crisis that happened in 2008, when most banks were not able to provide the required finance, loan, and support to the general customers and the public at large. That's when the most of the startups started emerging. Those were called as fintechs, right? So they started emerging to provide, rather disrupt the entire banking system. They got a complete paradigm shift. The concept of the blockchain started to get the momentum in 2008. The entire finance becoming accessible to people was made possible by the startups which came in 2008. And then from there, the journey of fintech world never took a back turn, right? So it kind of just evolving and evolving at a lightning speed. So in 2009 is when the first Bitcoin was released. No one was aware. I just qualified my CA at that point of time. And I remember in 2010, a friend of mine had told me that you can buy Bitcoin at $1. $1 was like 75, maybe at that point of time, 69 rupees or something around that, right? 60, 70 rupees. And I could not even understand what it means. And I ignored that whole conversation. 2013, someone had told me it's 300, $200 or so. You can buy it. And that sounded too much for me. $200 is much. I think I ignored. Today, it is standing at 39, $40,000, right? It's kind of closely reaching to 37 lakhs. One Bitcoin is around 37 to 38 lakhs today. A person who invested one Bitcoin at $1 in 2009 could make 40 lakhs today, right? And that's the reason why Bitcoin is called as the gold of entire currencies, because it stabilized itself to be a very popular currency. Of course, there's volatility, but most of them started investing in the Bitcoins. Somewhere in 2010, I was reading an article where a person in Mumbai, right, I think 2010 or so, close to that period, had got a Bitcoin for $200 and he got multiple Bitcoins. Today, he's, I think, a billionaire, right? There are very fun facts about how people ventured into just buying the Bitcoin, which had no physical substance, which absolutely was not identified as a currency. People said it will be all there with you in the form of a quotes. You just don't know how to use it. If you lose your mission, you lost it, right? You just don't have the accessibility to it. I think even then there were people who took the risk, and that's where the evolution of the crypto as a concept came. 2011-13 is when the smartphones were very popular, and I think that was a complete shift for people using wallets, right, using digital modes of payment, and that made crypto accessible to most of the people. And 2014-16 is, I think, is kind of a period where most of this digital disruption industry started to gain momentum. In fact, I think they started to become public, they started to list themselves, they started to call themselves as probably just another bank, right? They started to give almost all the services except collecting deposits and, of course, retaining the deposits. The loans were made very easily possible by some of these startups which came up. And then the startup era, I think, continued. 2020 and 2021, the startup era is just continuing. If you look at the kind of unicorns that we have got in India, um, I don't have the exact count. I'm not sure, Pramod, if you know the count, but it's more than 90. I was just kind of researching today. I thought it is more than 50 couple of months ago, and that's, I think, more than 90 unicorns are there today. It was just so amazing. It used to take people 12 years, probably at some point of time, to get to a unicorn. Today, they're getting within 3 years, within 3 years, 2 years, within 5 years, people are able to think about getting to a 1 billion valuation. There are questions around whether this valuation is just a bubble. Will it burst? Is it supported by a liquid cash? Do they have enough liquidity? Of course, those questions gets unanswered, and it's kind of a separate topic to venture in. But the speed at which these startups are growing and making disruptions in the technology field, I think, is just evolving. And India being the third largest country with the number of unicorns that India has produced, and Bangalore being the fastest fintech sector and the startup sector, we, being at least in Bangalore, have amazing opportunities to connect to startups, be connected to people who are thinking about this new kind of technologies, right? New kind of business models. I think there are enough opportunities for us to capture the startup world. So that's about the fintech evolution. I think I'll just move here. So if you look at globally, right, why was there a need of digital assets? One could ask, first of all, if you go to the history, right, first of all, why was there a need of currency, right? There was never a need of currency. Barter system was good enough. One could give one asset and then could take another asset. People were happy. But humans never get settled with what we have. They always want evolution, right? We always want invention. We always want innovations. That's how I think the human brain works. It always wants to explore new things, get new experiences. And I think that's kind of predominantly why digital assets also started driving the markets. Uh, it's not that cash is not sufficient, but the biggest challenge with, I guess, the cash was it is fungible, It has subject to risk. Of course, even the blockchain, rather even the cryptocurrency is subject to risk, but there were inherent limitations for people to seamlessly use probably exchange some currency which can be exchanged for goods or services. I think it was some kind of a drive. The entire financial services market wanted to see that disruption, and then the digital assets not automatically emerged. So what could be the reason? Financial industry wanted to participate more. There were a lot of crypto native business models. The startups never sit quiet. When 2009, you know, no one knows who found the Bitcoin. They just take some person's name that has also been more fictitious name, right? And with that fictitious name, when he kind of released the code, everybody wanted to just figure out how that code works and can we do more mining. And many startups and the crypto native business models started emerging. Today, if you look at the ecosystem, there are multiple startups. In fact, Coinbase has gone to even listing, right? So it's a listed NASDAQ listed company, and of that size, they only deal with cryptos, right? So that's kind of how the business models over the period of time evolved. Domino effect, of course, consumer sentiments, right? Utility, the different asset classes started gaining attraction amongst the people, right? Even the banks were not quite. Central bank released a stable coins. They said, okay, if everyone is releasing the coins, why not us? And there are stable coins whose value is represented by probably just a fiat currency, which is a normal currency that we use, and thereby they don't fluctuate. So with the interest that people started showing, there were multiple in the ecosystem, multiple startups and multiple banks started to think about how do they serve the different set of customers and help them, rather just kind of make them equipped with the entire technology. I think that's how this whole evolution started. Now, who is using digital assets? Many of them are using digital assets. I was listening to Wazir Nishchal Shetty's one of the speech very recently, and I think he was mentioning that it's not too far. The kind of the market disruption that has happened, the number of users are just multiplying. Actually, I think we have a slide where we can kind of just show you how the number of users are multiplying. But there is probably an estimation that by maybe 2025 or so, at least close to 20% of the population, if the way I think the kind of the digital modes that we are in and smartphones people are using, and the curiosity that they're getting on understanding just the word called crypto, right? Coin, non-fungible tokens, right? Metaverse. I think with all of this, at least 20% of the Indian population will be in the platforms to buy this currency or buy this coins. That's, I think, is an estimation, and that's pretty much a lot. And therefore, you see all of these startups wants to invest in India. We have so many advertisements that are just coming up on the blockchain space, and so many companies are just setting up their own presence in India because they know there's a huge opportunity. Of course, government is therefore trying to think twice, rather multiple times, to regulate it, because they just don't want a situation where they regulate and everything becomes a mushroom and everybody starts to kind of mine together, and we cannot then monitor what is fake and what is real. I guess government is taking its own time to get to a regulation. But what is very interesting is that without regulation, we are taxing it. Right? That's kind of a very interesting fact of our government. Generally, you have some regulation, right? And some regulation is a base for you to tax. Even if it's illegal, some regulation decides it to be illegal, right? And then you tax illegal income. Very strangely, in crypto case, nobody has determined whether it's legal or illegal, but the government just went ahead and said, I don't want to comment on the legality. I don't want to comment on the nature of the business. It could be speculative, but don't want to comment on what it is, but we will tax it, right? That's kind of the mindset of I guess this budget that came up. That was a mindset of people who framed the budget. They said we'll tax it, but we don't want to comment on the legality. So nevertheless, I think who are using the digital assets? Traditional banks, non-crypto native firms, right? Decentralized finance exchanges. I think all of the people whom you see on the right side, right? All of these are users of digital assets. There are a lot of, I think, evolving models that are coming up. We would not deep dive too much into it. We'll spend, as we said, a lot more time on accounting aspects. But there are many fintech business models today that includes digital banking, right? There are payment banks. There are many payment banks. In fact, we can just not imagine, I think, how the financial service sector is evolving. Probably there was a time where only nationalized banks and privatized banks and maybe set of NBFCs and microfinance companies I think used to fund, but now the funding is so easy. I think we get loans, variety of loans. It could be student loans, it could be just a bridge loans, boat loans, right? You and then there are companies which are emerging in buy now and pay later kind of models. Amazon, for that matter, provides the service for us. It kind of provides the facility where you can buy but pay it in 6 months installments, right? So they're not a bank. They probably might not even be tied up with the bank, but they are tied up with certain startups which are helping in the BNPL model. And when you look at the sentiment of the startups which are into buy now and pay later kind of the model, right? Most of them are not thinking to make profits. That's, I guess, a different word altogether now. None of the CFOs are bothered about, rather, I would say, not very concerned about the bottom line. What they're really concerned about is the top line now. Right? They just want to build now and probably make profits later. That is what could be BNPLs. Probably for them, build now and profit later, and not really focus on too much of the bottom line. So that's kind of the evolution that's happening in the payment banks. New banks are coming up. There are credit scoring companies. There are loan marketplaces, plenty of it. Bank Bazaar, Paisa Bazaar, and a lot more are emerging. There are P2P, peer-to-peer lending organization. There is a digital mortgage platforms that are available today. Small personal loans and instant credits are very easy. Sitting at the home, we can just click instant loan and the amount gets credited to your account probably in fraction of minutes, and you have to submit the documents later. That's the evolution, right? If you're eligible for an instant credit, you can just get an insta credit. If you have a cred app and you've got some cred points, you can just go for a loan in fraction of seconds. I think these are different ways in which the fintech business models are emerging. Crowdfunding, right? So some of these are different business models. Just not fintech is not just in the banking space. Even insurance is evolving a lot. There are decentralized insurance platforms today where you can actually take a policy without even getting a medical test done, right? You can actually just redeem or maybe redeem your claims without even submitting plenty of the documentation. The startups are trying to focus at on speed, right? They just want to give a customer an amazing experience, right? If there's a car accident, you don't have to submit 1,000 documents and wait for what should be the claim amount. You just click a picture and send them. They determine what is the amount and pay immediately, and then the later any adjustments takes place. That's a speed at which the startups are operating. No wonder why government wants to also evolve in the privatization sector. We'll have to see how LIC goes, what happens with LIC, IPO, and all of it. But there are multiple insure tech industries, that is startups, which are now evolving. Decentralized insurance is a very, very prominent concept now. There are in fact insurance on the crypto wallets as well. If someone has a wallet, and if they lose the wallet because they've lost a private key, there are insurances on that. Like it protects you in terms of your crypto wallet balances. It protects you from any theft or fraud that could happen to your wallet. I think that's kind of the evolutions in the insurance field. A lot of evolution in the reg tech firms that are happening. Right, people are using artificial intelligence and machine learning to help companies to reduce the compliance risk, automate the different filings, regulations that are needed. Investment banks are also not less. They have come up with the wealth tech. A lot of these traditional wealth management firms, right, which I think used to create the portfolios. Now there are very alternatives available for these traditional wealth management firms. Wealth tech is also going very well. Robo advisory is a concept where the robo advises you where to invest in. Instead of you paying a portfolio manager a fee, they've kind of designed with all the technology a robotic function that advises you where to invest your money and how to maximize your wealth, right? So that is like kind of an evolving models in the fintech business. We can keep talking about it. This is an amazing word, backed by technology, very powered by a lot of enthusiasm and sentiment amongst the people. There are always those two schools of thoughts. A school one that always believes that disruption is part and parcel of life, and change is the only change that you will see, and you have to change along with that. And the second school of thought, which would take some time to get to a change, and nothing wrong, because they still stabilize the existing practices, right? They still stabilize existing models. But I think that there's different schools of thoughts, and if we are in the tech school, there are a lot of things which are changing in the technology world. So these are certain fintech companies that you would see globally, which are very prominent, which are kind of very well known, right? And these are certain fintech companies from an India perspective, which we all know: Paytm, Razorpay, Pine Labs, Grow, right? I think Policy Bazaar, Cred is, I think, the most popular. I'm sure most popular amongst many of us, and we kind of, it's fun for me. I keep playing those games, right? I keep playing and keep collecting coins, keep redeeming coins. I think it just become, I guess, a part of our normal uh, way of, I think, spending money. We kind of use cred to pay credit cards, right? We could never imagine, first of all, credit card is an evolution. Paying credit card through net banking was an evolution. Now we use cred to pay credit cards and earn points there. So that's kind of really amazing business models that people have thought about. CoinSwitch, Zeta, some of these are evolving fintech companies. There are plenty, but I think these are some examples that you could think through. I think this is what I mentioned. I just want to pause and see. Still virtual working. Pramod, Manik, I'm audible, right? I'm live.
Yes,
Yes.
yes, you're
Okay,
good.
that's amazing. This is, I think, what we miss, right, in the virtual world. You're just going on and on and on, looking at the screen. Okay, there are certain amazing fun facts about the whole world of digital assets. I'll kind of just quickly talk about this fun facts and then hand over to Manik on covering the whole world of digital assets. But before we technically get to the word of digital assets, it's, I think, really funny. Some of these things are Bitcoin today is called as gold of the entire crypto world, right? But no one knows who mined it. There was a name that they gave called Satoshi Nakamoto, but apparently it is a fictitious name. No one has seen him. There was, I think, a statue that was made just to represent how he may look, but no one knows who is he or she, for that matter, right? And how this person even came into word. No one knows who actually coined the Bitcoin, who mined it. It just went on, and this created evolution. It all started with somebody just releasing it, a kind of a code that helps to mine and get certain get some value out of it, and it kind of just boomed from there. And how did Dogecoin become so popular? I think that was also, we all know, one day Elon Musk tweeted, right? You know what he tweeted? He said Dodge to moon, and it actually went to the moon. The coin just gained out of nowhere the popularity. Everybody started buying it, and today it is still one of the most traded currency. But I think it has no business model. It has no value by itself, but it just some sentiments, I think, through which it becomes popular, right? What is the term used to refer Ethereum fee? So Ethereum and blockchain are the networks on which the crypto transactions happens, and the fees that which is paid to access these networks is called gas fee, right? That's kind of very interesting terminology overall. And then this was very interesting. I think a man in Florida had paid at some point of time very long ago 10,000 bitcoins for two pizzas. Maybe he would have got it free. Somebody would have just kind of dropped him to his wallet. Like, he would have probably had this as an airdrops, and he would have just thought, okay, I have something. Why do I not use it? And he paid 10,000 bitcoins for two pizzas. I was just telling somebody he would have committed suicide now. It is 40 lakhs one coin, right? So 10,000 coins. He could have been a billionaire today. But those are fun facts about this world. You never know how it's evolving. He thought that's fun at that point of time. And I was telling, I mean, I was kind of thinking that he could have bought entire pizza chains, right? Entire franchises he could have actually owned with that much of amount. But this was very fun at that point of time. There's also a blockchain game that is available. I have never played it. If you're interested, I think you can play it. Which country accounts for the most mining? Of course, China. That's the reason why China is on the top list of entire climate change and sustainability matters. Everyone is pushing that they have to be more conscious about what damage that they're creating to the overall earth. But the 65% of the mining happens in China, and mining apparently consumes heavy electricity and thereby damages a lot to the environment. And I think it's another way why most of the people who are practicing sustainability and are pro towards protecting environment are against mining as a concept. I think this is all about a very high level view about the fintechs. What is like some fun facts about the entire world of digital assets. Not sure we probably not sure if we have some reactions, we have some questions. We can't see the participants, but we're hoping that you're enjoying so far and it's kind of synced well.
We
Manik,
don't
back
have
to
any
you.
questions so far.
Yeah, do we have participants, Pramod?
Yes, yes, of course, there are around 190 participants.
Okay, that's amazing. That's great. Okay. Awesome. Manik, over to you and on Word of Digital Assets.
Yeah, thank you, Asha, and thanks, Pramod. So yeah, I would say, the more I read about this topic, it kind of, leaves me excited for more. So you can go endlessly, reading about this. And just to put some numbers here to the introduction that Asha gave about, evolution of fintech as an industry and how big the crypto assets are. This is exactly how we also thought, when we started initially, that no, it is just some speculation that is happening, and no, we did not really know how big it was. So that's why our first slide is to kind of, set the stage that yes, they are actually a big deal. Putting some numbers, so, you know, something that started in 2009, as, it was just spoken around $1. It is now for 46,000. So it's a 46,000 times increase. Again,
It's
something that
reduced
was
now,
never.
I think, right? Manik,
Yeah.
it's become 40,000 or
It
something.
it has come back. It came back to 28, then now again it has come to 40. So the kind of volatility, the world has never seen something with a financial instrument ever before. At least with my 10, 12 years of experience in financial instruments industry, nobody has seen this kind of instrument at all. The market cap, at its peak, it hit $3 trillion as a market cap, and I'll show you in the next slide. It was not even 500 billions 5 years earlier. So the kind of jump, there's one thing called a linear growth, then there's an extrapolation, and then there's Bitcoin, I would say. So it has kind of, set another level. Retail participation, if we talk about, the use case or the number of people accepting it, 300 million crypto users worldwide. Over 18,000 businesses have already started accepting crypto payments. Major financial instruments, BlackRock, Vanguard, Fidelity, and you get to learn about a new name every day. People are really kind of joining in. That kind of adds to the stability or the credibility of this technology, that it is here to stay. It is not just gonna go away or vanish some other day. More than 15,000 crypto assets are already available. These are just coins, and we are not talking about the entire bouquet of digital assets right now. Over 440 exchanges, dominated by Bitcoin and Ethereum. And then the funding is, that it says global venture capital investment, cryptocurrency and blockchain companies estimated around 27.4 billion as of November 2021. So that kind of money has already poured in, and it is just growing at a different pace altogether. So not kind of, loading you with too much of information, but just telling you that yes, these things are real, these numbers are vetted, coming from legit sources. You'll see 2017, as I just said, it was around 0.6. Then, till 2020, it was just a fractional increase of 0.1. And then from there, it skyrocketed to 2.1. So threefold increase in a span of 1 year. That is how volatile this is. And, still, if you'll see the retail growth or the, users growth, it's just few fun numbers. 16, this is all US based numbers, since US has adopted this at a very rapid pace. 16% of US population, around 25 to 30 million people, owns cryptocurrency. 25% cryptocurrency exposure of personal wealth. So they are keeping their risk portfolio at least 25% using crypto assets. 90% growth in Coinbase verified customers over the past 3 years. So Coinbase has essentially doubled its customer base over a period of 3 years. 100% increase in crypto users, 353% year-on-year growth in Cash App. Cash App is nothing but a product that helps you, buy Bitcoins. 700% growth in the DeFi token market cap. Again, these are all just numbers, but it tells you, how the industry is headed and what kind of disruption it is creating in the centralized or the available traditional financial markets. Now, we'll not go very detailed into the technology. We'll talk about blockchain, using a very simple example. But if we as financial people, we need to understand what is a digital asset. For me, a digital asset is something, if you go by the regular definition of what is a digital asset, sorry, a digital asset is any text or media that is formatted into a binary source and includes the right to use it. So anything that can, two aspects, anything that can be formatted using a binary source code, and there is a right of use attached to it. As simple as that. I mean, that this is maximum that I could understand even after reading through extensively on what is a digital asset. But, and it can be a text, a media, a multimedia, a photograph, a video. It can be anything that can be structured, using the technology. So cryptography is behind everything when it comes to the essential technology behind blockchain is cryptography. So anything that can follow that medium and, associate itself with a binary source code and gives the holder or the custodian a right to use is essentially a digital asset. This is like a broad definition of what comprises a digital asset. There are endless benefits. The cost of holding is very less. There is rapid settlement. We'll all talk about that in further slides. The 24/7 availability, the decentralization in itself, with nobody has to depend upon any particular agency to kind of purchase or sell the asset. Two categories wherein we broadly bifurcate digital assets are fungible and non-fungible. A very simple understanding of what is fungible and what is non-fungible. Fungible is something that is identical. So, to token A and token B, or asset A or asset B, currency A or currency B. If I, at particular time, if I exchange those will give me similar value, or those can be traded or placed, used in exchange for each other. Whereas non-fungible tokens are something that are very new. You'll hear a lot of people saying NFTs, 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 and every company is kind of NFTing their logo. They're making sure that they're protecting it and nobody else buys their logo and all that. Non-fungible tokens are nothing but these are unique. The look and feel, the appearance of them makes them unique. A painting, we are hearing that paintings are getting sold for hundreds of thousands of dollars. There are certain companies' logos that companies are converting into NFT tokens and issuing for their users at hundreds of dollars. And so this is, in a way, kind of, we used to study IPR or patent or all those things. So now you don't need any third party agency or anybody to kind of protect your asset. Once you have a non-fungible token of a particular picture, of a particular video, of a particular piece of land, or of anything, then that asset belongs to you. In terms of this technology, nobody can kind of take that away from you. So in fungible as well, then there are multiple streams that are available. In fungible, the broad categorizations are, again, cryptocurrency is something that we have been talking about and we are all very familiar with. Stable coin, a difference between a cryptocurrency and a stable coin is that stable coin has some kind of asset backing. The reason why we use kind of is, that it is still evolving. Some people say it is fiat currency. Some people say there are collateral assets. Some people say it is just basically cryptocurrency with a moderate volatility or less volatility, so that it can be relied upon better for a consistent return or for consistent valuation. CBDC, India just announced that they're gonna issue a digital rupee. Digital yuan is already there, sand dollar is already there, e-krona is already there. So central banks are kind of in the race across the world to issue their own digital currencies. Security tokens are similar to NFTs. The only difference being these are fungible. So there can be multiple tokens identical, and these can be exchanged. Just you'll see that you'll see a lot of brand names there. As I said, that the companies are issuing these to their users or their customers. So Netflix, Tesla, Apple, Amazon all have their security tokens available. These are, I would not still call them as this as an exhaustive list, because the use cases of these assets or this technology are evolving every day. It's not that okay, this is the umbrella and it will stay like this. The umbrella is expanding, the ecosystem is ever expanding. We'll talk about that in a bit, but these are all just few use cases that are available and have already stabilized or made their place in our lives or in our economies. As we kind of keep moving ahead, the use cases are only going to grow when it comes to digital assets.
Absolutely, Manik. I think there is an Amitabh Bachchan's picture that is actually put in an NFT now. So there are, I think, three pictures that are copyrighted, so nobody can take away, as you rightly said. People can make number of copies of it, right? But the origination, the original owner would always be the same. That's kind of an amazing way, right? You rightly mentioned that the patents and the copyrights, they were so much that we heard about infringement, right? Somebody stealing your copyright, somebody kind of made this. But if it is in the crypto space, and I think the word crypto also, I was just reflecting why the word crypto came up, and it's nothing but encryption, right? The whole background of a crypto is an encryption. So we know about encryption and decryption. That was one subject, as a CA student I just could not understand, and I was just trying to read over and over and over, right? Private and public key, asymmetric crypto system. We had all of those jargons that which never made sense at
Exactly.
that point of time. But I think the whole back up of crypto is nothing but an encryption. It protects so well everything through a smart contract that nobody can actually break that encryption, right? So that's kind of why the digital assets are evolved over the period of time. If there's an NFT, there is just an NFT and you are the owner forever and forever. People can create copies of it. The number of blocks they create, it'll just be block. It's just a copy, but the main source would always remain with you, right? So that's kind of how I guess things are evolving. That was interesting.
I agree. It can be validated, like in a split second, which used to take years in terms of, fighting all those
Investigations to
patent and
validate.
infringement
Right.
laws. Yeah.
Yeah.
You just, yeah, provide your access key and there you are. You can say what is okay. So some key terms before we kind of, get into the blockchain technology and, henceforth accounting, which is kind of our core strength here. The reason why we are kind of stressing on all this was to appreciate the concepts of how there's no authoritative guidance on accounting as such available across the world on, this section of digital assets or overall digital assets, I would say. The reason is that when we started studying this topic at least 6 months back, and when we started working on this, we had to understand all of this to even make sense of whatever accounting literature is available around the world. There's no other way we could not really make sense of the available literature without really getting into the thick of different things. A very simple thing is, we used to learn cold site and hot site during our CA days with respect to data management, that okay, you protect your data, you safeguard your data. There's a cold site, there's a hot site, where there are live copies of data, and there's a cold site wherein there's a backup of data. Similar technology is coming back. There's a cold wallet and there's a hot wallet. So a hot wallet will have will give you access with the private key live, whereas a cold wallet will store digital assets offline, making them secure from bad actors. But it is again difficult to trade. So all that linking has to happen. There are again centralized exchange and decentralized exchanges. The prime reason for these digital assets to flourish is the existence of a decentralized exchange. Again, going back to the fintech evolution, 2008 was indeed a cornerstone year, as people really saw that what could happen in a centralized environment as well, and that is when the need for a decentralized exchange or a decentralized system, peer-to-peer system of financial network came into place. The need was, when the centralized system did not give us the results we expected. So Bitcoin halving, there's a simple technique that, as there can only be 21 million Bitcoins ever. So what they do is to prolong it, that every 4 years, the reward that a miner gets to kind of mine a Bitcoin is halved. So they are expecting that it will take us till 2140 to mine all the Bitcoins, whereas already 70% of coins have been mined by last year. So multiple terms just to give you a sense of, what all entails in this overall umbrella.
No, thanks, Manik. You're right. I guess it's very interesting for me to know that even Bitcoin mining that's a reason why it's called gold of coins, right? So it is also subject to
Exactly.
extinct at some point of time. It'll all be available with everybody. The way I think we all have gold and exhausted KGF. Manik, you may not relate. Probably if you would have heard KGF for sure, right? But we being in Karnataka could relate it very well that everything is exhausted, but the gold is with everyone. That's it. Is what going to happen with Bitcoin. You mine it and everything gets exhausted, and it's no different than the gold, I would say, right? So even the fractions have value. you lose a small fraction of it, you've lost a huge value of it. No one today is buying one Bitcoin. I can't think of spending 40 lakh rupees and buying one Bitcoin, but I can think of spending 400 rupees and buying 0.0000 of some coin, right? So that's kind of the fractions which is making people more accessible to this word. People are very, even though they have a limited money, they can invest in fraction of coins, right? Which we could probably have not thought about in any asset. But of course, every entire word is evolving. If you look at REITs, real estate investment trust, that's a concept. You can just invest in one unit, like just 1 square feet. Because the word is going to the decentralized mode now. No one is thinking about big. The concept of if you have big money only, you can afford certain things is going away. Whatever you have, if you have small money, you take small coin, right? You have big money, you take a big coin, but you have access to take everything in fractions. That's kind of the beauty of the entire crypto world. So I think moving on, probably Manik, I'll touch upon this and you can maybe take up the next thing on the key terms. Right, moving on NFT, Manik already spoke about what exactly are NFTs. Distributed ledger technology is the background for blockchain. As we said, we're not getting into that technology. And I'll be honest, I have not understood that technology even to talk about it. It'll be very bookish and academic for me to even deep dive at this point of time on the distributed ledger technology. There is definitely a sense about it. There is use cases. There are definitely different examples that we've learned how this technology has helped. But I personally haven't experienced myself to talk more around it. But that's kind of a base for the entire blockchain technology. Today, we have got largely the blockchain and Ethereum are the two greatest networks where all of these cryptocurrencies are evolving. And those are the very strong, stable networks that are available, works on a distributed ledger technology, creates blocks, right, makes the multiple copies of things. Initial coin offering is again a very interesting word. We spoke about IPO, we spoke about FPO, we have learned about initial public offering, further public offering, but ICO is an initial coin offering where the startup companies, to make their coins reachable to the larger public, they come up with ICOs. Many business models are evolving within startups and they're coming with different features of ICOs, which is where the accounting implications are getting complicated. In India, because it's not regulated yet, there is no exchange per se to get to a complete ICO mode, but we have access to the global ICOs today. You can invest in the global ICOs, which are interesting. Coinbase is a very popularized centralized cryptocurrency exchange. It's stabilized in India. Hyderabad, they have a huge office setup. Bangalore, they have a huge office setup. Coinbase has found Bangalore and Hyderabad, largely India, to be their hub for doing all their platform accounting, all their recording, transactions. Naturally, I think after China, India is the labor intense country, and the trust on India has gone multifold, maybe due to pandemic or due to the good deeds that we have been doing for the last couple of years. I think it's kind of the hub for many fintechs and startups, and Coinbase is stabilized in India. Mining is a process where new cryptography coins are made available and the log of transactions are maintained, right? It's a process through which this coins gets mined. Escrow is no different. Escrow is a place where you can deposit for a certain period of time or just have a third party holding your resources on behalf of you and just keep it safe for you. I think there's a certain terms which are used in the entire sector of digital assets. SAFT is a very emerging term. It's called simple agreement for future tokens. See, everyone think about uncertainty. Bitcoin is uncertain, we know. Crypto is uncertain, we know. But uncertainty is what everyone wants to safeguard, and they would want someone to underwrite people to buy their future tokens. So there are startups that are just getting into agreements that can we have a simple, why do we call simple agreement? Because these are smart contracts, right? It just executes automatically without anybody verifying it. That's the beauty of, I guess, simplicity of the entire crypto world. You enter into a transaction with a contingent event. When the event happens, automatically the transaction is executed, you get your money, everything gets closed, right? There's no checks and balances, no maker checker, no human involvement is required. Things happens very smart, and that's why we call the contracts executed in this environment as smart contracts. Without human intervention, it happens. Those are simple agreement for future tokens. Many accounting implications are emerged in US right now. In India, we don't see that very prevalent at this point of time, but we will get there with the way this is evolving. And as Manik mentioned, It's not an umbrella, it is a sky, right? Anything can emerge anywhere, any point of time. So we will find these kind of agreements emerging in India soon. So we have security tokens, utility tokens. These are different types of tokens. A token could be like either cryptographic, or it could be security, it could be utility. What is token is nothing but a tokenization. It is just nothing but creating a digital asset. Any digital asset that we create becomes a token, and then you use that token as a medium of exchange and a medium of trade, right? Medium of gift. You can kind of use it like a currency. Smart contract, we mentioned, it's a program that automatically enables basis a particular code. It's called smart because it is self-executed. It doesn't really need any directions, no approvals, no authorizations, right? The code and the agreements exist in a distributed and a decentralized network. It controls the transactions, tracks the transaction, recovers the transactions. Things are like super smart if it is in the network space. I guess those are certain key terms that we should be knowing in the world. This is just not enough. As Manik said, we have been studying this for like probably a couple of months now, and we could only maybe get to, I would say, less than 5% of understanding these terminologies. But there are multiple terminologies which are evolving in the decentralized finance world. But DeFi as a concept itself is really massive to crack. So, yeah.
Yeah, I think this is something that we have already spoken about, just giving maybe a recap of crypto. So four categories as we thought, just to kind of capture all of that, what we have just discussed is crypto assets, stable coins again. Crypto asset is the biggest benefit, or the reason for it in existing is it is an alternative to the fiat money, and it is a medium of exchange. Stable coins, again, crypto assets, less reduced, or less volatility or moderate volatility. It might be pegged to a stable reserve asset, or to a existing currency. Like there's one Tether that is pegged to the US currency, and then there's USDC. Digital securities and non-fungible tokens are something that we talked about in terms of companies kind of issuing tokens for their own brands, as well as there are certain paintings, videos, and all that getting NFT'd, basically the term that people are using these days, and then it becomes unique and non-interchangeable unit of data. So just kind of a recap of what we discussed. Now, what is blockchain? We'll not, again, as we discussed, we will not go into the technology in detail, but just in terms of touching base on what are the essentials of a blockchain. Is blockchain a software? The answer is no. It is both a database and a network. The essential parts of that network being distributed ledger technology, as we just talked about. There's no central ledger. No one is keeping books for all the transactions. There's real-time settlement, or there's real-time updation of each and every transaction, from initiation to proposal to holding of the transaction till settlement. So all of them, different copies of each of the transaction is maintained through hundreds of nodes at the same time. So this is how the distributed ledger technology works. Consensus algorithm: no one node or server is responsible for approving transactions, leading to genuinely distributing transactions processing. Each entry is validated across, recorded across all ledgers across the network. So as I said, everything is uh, updated real time. Smart contracts, programmable ledger, as we were just talking about smart contracts on the other slide. At the happening, or at the fulfillment of a condition, the trigger automatically happens and the transaction settles. Now, a very broad idea on how crypto works or why it matters. As we talked about understanding Bitcoin. Yes, there was a white paper that was published in October 2008 that talked about using cryptography as a medium of kind of enabling financial transactions, which which was an open source and open to all. Again, Satoshi Nakamoto is also a pseudonym. We don't know who that person is or who that person was. Essentially, the problem that it was designed to solve is take care of the centralization piece. So money, they said, everything is moving fast, everything is coming up with a digital age, but money still remains in the stone age or in the analog age, where everything is getting reviewed, everything is getting verified through a centralized system, and there is too much dependence on centralization at all. And that is how the need for a distributed and decentralized database came into picture. How a Bitcoin transaction works is, again, we are not technical expert, but how we have understood it works is, if A wants to send money to B, A will kind of, using his or her private key initiate a transaction, which will sit in a waiting room over the entire network. And then different miners will kind of, get in a rush to solve multiple puzzles that will give them access to settle that particular block of transactions and send money to B. So to settle the transactions, they'll have to solve some puzzles first initially, and hence that would come as a reward for their mining, which essentially we call them as miners, or the entire process is called as mining. So few key terms to remember when you're talking about how a Bitcoin transaction works is there's a network, there's private key, there's miner, there's initiator, and there's an initiator of transaction, then there's a blocks of transaction, and the reward for mining is what you get as a Bitcoin or any other relevant coin in the network that you're operating in. Benefits, 20, as we talked about, rapid low cost 24/7 settlement. Normally if you'll see that banks charge, or different fintech, or I would say financial institutions also charge in percentages, 0.5%, 1%, 0.05%, whichever may the case be, which goes up with the amount, that you are kind of moving or transferring or settling or making payments for. But here, transferring huge monies can be done with a fraction of amount, because at the end of the day, the system is going to use the same resources even if you're, transferring $1 to 1 million maybe. So the use cases or the benefits come out of that, why should that be a percentage? Is programmable money, that okay, you don't need to make sure that the money that is being sent or the money that is being called back is dependent on a piece of paper. You can just program the money itself and it will move around on its own. There is no need of intervention of any other authority. So three things that have come up, that are the major players is, and their use cases are Bitcoin serving as, we talked about a digital gold or creating scarcity, as well as the largest mover in terms of benefiting from the capital appreciation. Ethereum again is the leader in the smart contracts, and Ripple is kind of a proxy decentralized network, which is helping to process payments quickly. This process is payments even faster than Bitcoin, with the only challenge being that it is kind of a proxy decentralized. So there's just a group of 36 nodes that are managing the network privately. So a bit about, different things, and here you'll see the overall ecosystem. We'll not go into detail with respect to each of that, but this is again, at the left end, this list is not an exhaustive list. The reason is that the nodes are increasing every day. We are seeing different use cases, different applications of this technology coming up. It has come into risk management and anti-money laundering. Tokenization has gone, leaps and bounds in terms of using this technology. As we talked about RegTech, it is coming in infrastructure. It has already made its place in payments, custody and administration, wealth management, trading. There Coinbase is a great example. So, the use cases or applications of the technology are endless. Right now, the ecosystem somehow looks like this, but I can definitely say the time we are taking to discuss this, somebody might be coming up with a new use case as well.
The new startups actually, absolutely,
Yeah.
it's powered by a lot of, I think there's a lot of backup created to make this transaction work. That precisely says that there's a huge acceptance. When I started at least talking about accounting for digital assets, accounting for crypto, of course there was not too much acceptance even amongst, I think, our own group. Manik can vouch it, right? We're like, okay, it's too early to speak, may not be too many people use it, but another side, if you look at it, there's so many people who are accepting it, right? As we said, there are more than maybe thousands of organizations which are okay to accept Bitcoin as a medium, as an exchange, right? They're giving goods and services just for the crypto, and they're okay to consider it to be a currency and revenue for them. So this is evolving and we cannot run away from it. That's kind of my personal view. Not that I'm expert, and I am one such person who never was tech savvy, could never understand technology, always felt it's safe to just go to bank, draw money, don't use card. That was kind of a pace at which I came up. I was never the first one to make any technology move. Phone pay I got only 2 years ago because I had no option with all this pandemic being there. So with that mindset, right, I am realizing myself that that's probably good for me personally. I can be anything, but professionally I do have no choice but to understand the evolving things, but to understand what could change the entire maybe the sector, right? The kind of accounting rules. There could be a lot of things that could change. Maybe we'll now get to a very our core topic and our strength of all of this. I think we spoke for an hour now is a background on which we developed our accounting slides. There's no literature available. There's no book available. There is not too much of content that is available to talk about accounting, but there are, of course, committee formed by IFRS group. The IFRS group has formed the digital asset accounting committee. FASP group has formed the crypto specific committee that is evolving day to day to understand how the accounting should come up. They've not given any literature that this should be the accounting, just take it. It is unauthorized literature. Everything that we're talking is today unauthorized. It's not black and white, but does it make sense? Most probably it makes sense because accounting cannot change. The way as an accountant I've understood is debit and credit will always remain the same. But what we debit, how much we debit, when we debit, right? I think is what evolves over the period of time, and that we should go along with the time. So keeping that in mind, right, when we just speak about accounting, I'll just go straight away to this. Accounting depends on which part of ecosystem you belong to, right? We just spoke about ecosystem, and each of these part of the companies that you look at, and these are all the startups, established companies. Some of them are already listed, some of them have got huge investors backing them. By the way, investors are crazily backing some of these companies. They're backing them with high risk capital because they know when they get the return, it's going to be multifold. Higher the risk and higher the return. The concept is not unknown to the investors, and they are very bullish about this market. The investments are hugely flowing into the entire ecosystem that you would see, and every one of them are subject to accounting standards. uh, Pramod, you were asking me that would we cover accounting standards, Ind AS, IFRS, US GAAP. You're right. Where they are based, we are not sure today. If it is a decentralized exchange, there was someone who were talking to me that we are mining. From where are you mining? We have just taken some facility. We've just taken some computing facility, and we don't have an office, no chairs, no tables, right? Nothing, no employees. I just need small facility to sit and mine. That's the kind of the infrastructure that we're looking at it. With home offices being so popular, people are not investing so much on aesthetic stuff. There could be no offices for some of them. They might be just operating from different places, having their own, probably just the laptop and their smart assets together and operating together. But where they reside and what they account depends on which part of ecosystem you belong to. Of course, we cannot cover in the short time accounting for every one of them, but what we wanted to cover is at least the major parties when we think accounting in mind. So when we look at the type of participants, right, one, you could be just a normal seller and buyer. Right, for example, Pramod and me just wants to buy and sell crypto, right? Why? We just want to speculate, we just want to experience what it is, and we just want to get into the trade. What is it for me, right? If you kind of just think naturally, it could be either an investment if you want to keep it for a long term. You don't want to really sell in a short period of time, but you want to sell once probably you believe that the capital appreciation could be much higher. Like Bitcoin, it's appreciated significantly, right? The one who bought it in 2009, probably at couple of maybe $100, are now able to make it at $40,000. They're still staying with it, they're holding it. The intention is not to probably immediately sell it, right? It could be an investment for you, or you just want to make fluctuation, maybe a short term gain out of the fluctuations. Bitcoin is moving up and down, it's too volatile. You may want to make money out of that volatility. Then it could be probably an inventory for you, right? So that's what we are trying to discuss today. What is it to me if I'm a holder of a crypto? If today I have 10 bitcoins, and if I've got few Doge coins and few X coins and Y coins. By the way, there's so many coins. There are, I think, more than 10,000 coins today are available to trade. Some of them are stabilized, established. Some of them are just trying to make their way, right? Just trying to fight their own battle to just come up in the list of top 10. But there are multiple coins that are available to trade today. If I'm just a holder, how do I account? I'm not a holder, but I want to just create an exchange, which is, let's say, WazirX in our example, right? It's an exchange. It is a centralized exchange that helps probably to get all the participants together in the marketplace. There would be buyer, there would be seller. I'm giving a exchange, I'm giving a facility where all the trades are noted. I can either buy or I can either sell. I think nothing more like how we had share khans and those kind of the share brokers who is to help us. Probably if it is an exchange, then what do I need to do? If you think from an exchange perspective, exchange does not may or may not own its own currency, right? If they don't own a currency, then they're just enabling the trade, right? You as a buyer are asking for something, a seller is selling something, both of you are paying a transaction fee to that exchange, and for that exchange, the transaction fee is an income. It could be simple, very simpler way of saying it. The complications would arise in terms of timing of the trade, right? What is the value of the trade? If it is a percentage of the trade, then what do you consider to be a value? What point of time you take that percentage? Multiple those considerations would come up if you are an exchange. If you're a company who's issuing, let's say, a crypto, Coinbase has its own coin, right? Today, WazirX also has its own coin. I was just looking at it that they have mined their own coins and they've released it, right? So if you have your own coins and you're an issuing company, what is it for you, right? It is your asset, ideally. Then how do you recognize for it? There are companies who are lending bitcoins and crypto. Sorry, Bitcoin just comes naturally, but I think we will broaden. It's always crypto. Bitcoin is one part of a crypto asset, right? And crypto includes multiple other coins. So if you are now lending the crypto, right, that is also possible. Very interestingly, let's say if Manik comes to me and says, can you lend maybe 10,000 coins to me, different coins, I will lend him, right? Now the question that arises is, I lent an asset, right, a loan that he would repay me in the same coin back. But the point is, the time I lent versus the time he pays me back, the coin value is changed. See what happens when I lend cash, right? I lend 10 lakh rupees to Manik. Manik pays me back 10 lakh. There's a time value of money during the period which is involved. I charge interest, and that's how the loan transaction is working. I charge, let's say, 10% interest. I have a loan, right? He's repaying me back the same cash to me, right? It is cash to cash transaction, or he may be giving me equivalent worth of something if it's not a cash, but there is also an interest which is involved for time value of money. But in a crypto world, let's say I lend 5 bitcoins to him and I said, you repay me back after 5 years. He may give me same 5 bitcoins back, but the value of those 5 bitcoins are going to be different. The question that arises is, who takes the benefit of the fair valuation, right? You're giving me 5 bitcoins back, but during the entire 5 years where Manik had those 5 bitcoins, there's a fluctuation of the value of the bitcoin. Who is going to take the benefit of it, right? What I should do? Should I call it as a loan in my books, but I can't recognize interest naturally, right? Then there is accounting guidances, that are saying that it could be an embedded derivative, right? You have loan transaction to the extent of what you lend, but you also have an underlying that is changing because of the market, and therefore there could be an embedded derivative that changes and fluctuates basis how market moves on. That is your fair value changes that you recognize. The transaction which has happened at a particular value is your loan. You recognize that to be a loan, which means you have a host contract, you have a derivative, account for it, right? So that's kind of how the accounting guidances are evolving. There could be minors, as what Manik also mentioned, that in some of the words that you should remember is minors, they get a reward fee, right? What is that reward fee for them? That's something that we should look at it. So depending on which part of an ecosystem you could be just a reporting entity. You're just creating a dashboard for people to probably just report, or maybe you're helping crypto entities to account transactions, right? Then how do you basically recognize? These are the very few parties that I spoke about in the ecosystem, but this is max, I think, what we can cover today. Maybe in the next 15-20 minutes or so, I'll cover about it. And we'll also look at audit considerations of what may change from an auditor's angle as well. But I think these are simple things. But if you're just visualizing the vastness of the subject, it's never ending, right? Each participant will have different accounting requirements. But what is a very good news is, when people went to these standard setters, right, and said, why don't you issue the guidance? The standard setters said, see, we don't really have to issue a separate accounting standard for it, right? Not required. We have already issued host of accounting standards. What you need to do is, in the given circumstance, you stitch all of them together and see what is appropriate in this crypto world, right? We have definition for inventory, we have definition for asset, we have definition for intangible, we have definition for everything. You just have to stitch everything together and say what is appropriate and account under the respective standard. What is happening in India? I don't think so there's any committee that's been formed yet by Accounting Standard Board. I'm sure they will have to form it with the budget being calling out virtual digital asset so explicitly. There's so much talk happening in the world after the budget release and 30% tax was announced on the virtual digital asset. There is more awareness about this subject, and for sure that the institute, in collaboration with, of course, Accounting Standard Board, has to come up with some guidance around how do we in India also look at these things. But the reason why we are not coming up the guidance is government has not regulated it. When government has not regulated it, we sit and issue accounting guidance, then we are kind of, it may become null and void because it's not flowing in the proper regulated channel. That could be one reason why we don't have authoritative guidance today, either an authoritative guidance today in India available. But in US and in the IFRS's world, the guidances are very vaguely available, which is what I think we have stitched in this document. So I think as I mentioned, if let's say you are the one who have purchased the crypto, the question that arises is how do I account for it? Which means let's say I have 10 Bitcoins with me. How do I account those 10 Bitcoins is a question here. So you can then ask me, one, do you want to trade in this or do you want to hold it? I would say, no, I just want to hold it. If you want to hold it, the immediate question is, okay, it's your asset, but what kind of an asset it is, right? You all agree that I have 10 Bitcoins and it's an asset for me. What kind of an asset? Is it tangible asset? Is it intangible asset? Is it financial asset? The accounting requirement for all the three is different. If it's tangible asset, I recognize it cost, less depreciation, right? Less impairment, but I can't call it as tangible asset as it lacks the physical substance. No one has seen. We're only seeing those beautiful gold coin with V on top of it. That's kind of a symbol everywhere, but that's not Bitcoin. It just doesn't have a physical substance. Is it a financial asset? That's again a question. Now, if we go back to Ind AS 109, and read about financial asset, the financial asset is defined to include a contract uh, that is enforceable by law, right? And which creates a financial asset for one party and a financial liability or equity for another party. And financial asset is meant to include cash, right? Any enforceable right to receive cash or any derivatives for that matter. I think which you can uh, which are most potentially favorable in a given situation is what is called out as financial asset. The point is it's not cash. Again, they said if you're saying it's a financial asset, is it cash? No, it's not cash. It's not backed by government. It's not backed by sovereign. It doesn't have a fixed value, right? Like a cash, it always has a fixed value. It has never seen dustbin because it always has a fixed value. It cannot be called as cash. It cannot be called as cash equivalent, right? Even if you go through all of it and say, no, I still want to call it as financial asset, the big argument is it is not legally enforceable. We're saying it should be a contract, first of all, to call something as a financial asset. What is a contract? It is nothing but an agreement that is enforceable by law. There's no law in India today, right? We just don't have any law. There is a cryptocurrency bill. I think we will talk about it very high level. We have a slide on it, which is not yet out actually, but there is no law at this point of time. With all of this analogy put together, the conclusion standing today, because we don't have a regulation, we don't have backing from government, the answer that we are getting is crypto is an intangible asset, right? That's kind of a large answer. Okay, that doesn't end the story there. If you say intangible asset, how do you recognize an intangible asset? Now I say I have Bitcoins, I've got 10 Bitcoins. Let's say hypothetically, the value of it is $1, example only. So then therefore I've got 10,000 into one, $10,000 Bitcoins with me. It's an intangible asset I'm saying, right? Now I'll have to recognize intangible asset at cost. I recognize $10,000. I should do less amortization. What do I amortize? Right? There is no period for which this coin is valid, right? Or I cannot say I'm consuming it to say that there's a benefit for a particular number of years. So therefore, amortization is not applicable in the world of crypto. So therefore, how do I impairment? Is it applicable? Yes, of course, impairment is applicable because there could be a potential impairment that is very challenging to find out. You will never know why the market is fluctuating, whether it is on account of a permanent reduction or whether it is just a temporary moment or whether it is because Elon Musk just tweeted, right? The value went down. He just tweeted back, the value came down. How do you then determine an impairment indicator in a scenario where the market is so volatile? And you could never understand the movement of the market along with the performance of that coin. You could never match it. Then the question that's arising is on impairment, how do you really go about impairment? So I'll conclude on this slide. If you're a holder of a crypto. It's an intangible asset because it cannot be tangible, it cannot be cash, it cannot be financial asset. It's an intangible asset because the intangible asset lacks the physical substance, right? Where we are struggling is amortization cannot be done, but however, impairment needs to be done. How do we need to impair? We'll look at it. I think the guidance is around how do you go about impairment as a whole, right? That is all if you want to hold an asset for a long time. If you want to trade, your intention is to trade in crypto, then they're saying it's an inventory. But what is interestingly coming up is the different literatures have defined inventory to be different, right? uh, Inventory in certain accounting frameworks has a physical substance, like just a PP&E, right? Like a fixed asset. Then I can't call it as an inventory because it lacks the physical substance. In certain accounting frameworks, inventory also includes an intangible asset, right? It doesn't need to have a physical substance. In that case, inventory, it can be an inventory, though it lacks the physical substance. But just to call it as an inventory, we can't blindly say it as an inventory. We need to apply that to a definition of an inventory and see how do we conclude that it can be an inventory if my intention is to trade in the currency. If you conclude that to be an inventory, then the question is how do we recognize inventory? We know the simple measurement principle. It's cost or net realizable value, whichever is less, right? Cost is understood. The day whatever I purchase, that's a cost, plus whatever is the directly attributable transaction cost. All of that is a cost. Maybe difficult, but not too impossible to identify. But how do you identify net realizable value? Net realizable value says it is sales minus estimated selling price. At what value you sell cannot be determined by you. It's not an MRP driven market, right? Where you say, I fix the price at which I sell. I know I will sell at 10 lakhs, hence 10 lakhs minus cost. You will sell at the market rate that day, whatever is the rate on that day, and that is not known to you. So just to say cost or net realizable value, whichever is lesser, the net realizable value documentation is very tricky because I don't know what am I going to realize. Those are the accounting complications we live with. The idea of this session is definitely not to conclude, as we also don't know what's the conclusion is, but to leave you with the thought that these are certain things that comes up in the world of digital assets. And when we talk about accounting, it's as fascinating as crypto trading is, right? For our profession, I think that's the beauty of our profession. Anything which evolves anywhere in the world, there will be accounting implication. And it makes us very fascinated. And I think we kind of all the time feel that we need to learn, we're outdated, we need to figure out because we're kind of evolving with the businesses. That's where I think I leave the thought with. I guess this is all fine. Now, if you look at impairment, right? So we spoke about initially, if I conclude this to be intangible, I recognize it cost, less amortization, less impairment. Amortization is not applicable. So let's take that out. It's cost, less impairment. How do I impair is a question. Impairment is again, same principles I'll apply. If carrying amount, which is cost, is greater than the fair value, then the impairment exists. Now, the biggest challenge, if you're understanding rightly here, is the fair value, right? How do you determine the fair value? What point of time you determine the fair value? It's a 24/7 exchange. I can transact midnight also, I can transact early morning also, not like a stock market where there's a quoted market price available to say this is a fair value. And every exchanges have their own fees, right? It is 24/7. Probably if there is another day, we can add it's 24/8 also because you never know, right? The speed at which this is evolving, there's an additional day that I can add, and that's kind of the evolution, and fair value is difficult to determine. But there's no option. We need to determine the fair value. And what the standard says is, if you kind of happen to remember, if you're reversing, let's say you recognized an impairment, thinking carrying value is less than fair value. My carrying value is $10,000. My fair value was, let's say, $8,000. I recognize 2,000 as the impairment loss. Tomorrow I realized, this was just a momentary. Volatility showed me that the prices also again increased. The question that arises is, can I reverse the loss? Right? I've already recognized an impairment loss. Can I reverse it? I'll have to go to the accounting principles. It doesn't allow me to reverse it. Right? So depends. Again, each frameworks are different, but the general principle is it doesn't automatically allows me to reverse it. Then the question is, I have to be very conscious to recognize it. So these are certain things which a holder has to keep in mind. To sum up, crypto is an intangible asset, right? Cost less impairment, impairment considerations are crucial because fair value is volatile. If you're trading in it, it's an inventory. It has its own challenges if it's an inventory because cost less net realizable value, determining net realizable value is challenging. When you say I need to recognize the cost because we're selling fraction of coins, right? We mentioned I can also sell 0.01 Bitcoin, right? Now, how do I determine from which lot do I sell it, right? I'm purchasing every fraction at every minute. I can buy fraction today, I can buy fraction tomorrow, I can buy fraction for 10 days. I sell the fraction on 11th day. I need to identify from which coin I sold it. I will never be able to do it. Can I do weighted average? Weighted average may not be a right idea as the prices are too highly volatile, right? It may not represent the right price. And how do you do it also is a big question. Then the industries are coming up with the conclusion that let's go with FIFO. Let us assume that whatever we sell on 11th day is the one that we purchased on a first day. And on that basis, let's value the inventory on a FIFO basis, which is more acceptable from an accounting side and fairly seeming to be business convenient for people, right? So that's, but it's easier said than done. There are no softwares that are helping you today to measure inventory on FIFO basis, right? SAP, Oracle, Tally, all of those big softwares that we talk about are not at this point of time featuring crypto as a functionality, right? Not, I think it's not enabled, it's not customized to handle that. So then it becomes an out of book software. You need to create your own systems, your own softwares, your own in-house mechanism to measure the fair value. That is where the industry is struggling today. They have a lot of manual exercise. And if you can just, I mean, if I'm not boring you and if you're still staying on with me, there is numerous transactions. You can think about it, right? It's not one or two, it's fractions, and there'll be thousands and lakhs and crores of transaction. How do you manually track a FIFO basis of accounting is a big challenge today in the industry. So that's about largely if I'm a holder of a crypto, how do I account for it? I think I will probably speak about cost. I said impairment. I also need to talk about derecognition. My accounting goes in the principles of recognition, measurement, presentation, disclosure. I will have to do initial recognition, subsequent recognition. Once everything is over, I also need to derecognize. At what point of time I should derecognize is also a question. If so far with our 1 hour of understanding with Manik and me, trying to kind of download all that we uploaded so far with you, if you kind of got that right, this is such a volatile market, right? This is all with smart contracts. It is automatically executing. As you know that once I think the contract is closed, it's automatically executing. You need to know which day you need to de-recognize that, right? It could have so happened that the coins are automatically transferred to the other person. And you need to track it that now I need to de-recognize a transaction because it's already executed by smart contract. No approvals. If auditor comes and asks, why did you de-recognize? You'll say it is transferred. Where is the contract? Nothing written, right? Is somebody approved it? Nothing is approved. So those are the challenges I think we get. The timing of the derecognition is a question in consideration. That's about if I'm a holder, right? I just want to reconfirm, Pramod, are we going okay? Am I audible?
Yes, you're good. You're going
Yes.
good. You're audible.
Awesome. Awesome. So if I'm not a holder, but I am a, let's say I'm a company who sells mobile phones and I accept crypto as a currency to sell the mobile phones, right? Or I'm a restaurant who sells food and accept crypto. You can actually pay me in any kind of a crypto medium, right? Or you can pay me in NFTs also. You can transfer me whatever you have and I'll accept that as a money. Then the point is, you can think about it. I sold a mobile phone worth X amount. You paid me X amount of crypto that day. For me, that crypto is a revenue. I need to recognize that as a revenue. So what is my debit? Debit otherwise would have been cash, right? Or a bank because you were paying me cash or bank to revenue. Today that cash or bank has to be replaced by a coin. Now, immediate question that comes in mind is that the minute I say I received a Bitcoin, I debit Bitcoin, I credit revenue, the Bitcoin for me is not a cash, it's not stable, right? Now I need to start recognizing it either as an intangible asset or as an inventory. Now I need to look at how do I recognize a Bitcoin that has come to my books because I sold it. Now those are the two legs of the transaction when I'm a person who is who is accepting crypto because of the sale, right? One, I accept crypto, that is my debit. But once I debit it, it's not the end of the story because I got an asset which is crypto. The valuation of that asset goes to my general valuation principles, That again requires whether it's inventory, whether it is, whether it is an intangible asset, should I need to impair, all that chain will again start because I got the crypto as an exchange for the goods or services. There could be a case where someone would also say that, at what point of time you think the control is transferred is a big question if you are a person who is into the sale of crypto. I think I did mention about it. The timing of recognition is a concern when it comes to the whole word of crypto accounting. I'll keep it that way, not really overburdened so much. There's no end for it. I've been reading and reading and reading, and we just find many nitty-gritties as we move on. But I guess the larger principle is the timing of recognition, fair value, what kind of an asset it is. If I'm selling the goods and accepting crypto, how should I recognize crypto? Right? Those are, I think, the simple principles that we spoke about so far. If I now move to, let's say you are a company which is providing the hosted wallet service, and somebody is using your wallet as a medium to open up the entire trades for them. And I think the way I always understood, and I was talking to one of my friends, I said, I have a wallet, I've stored all the crypto in it. He said, what do you mean by it? You have to change your language. There's nothing called wallet to store. Wallet is only a key that is enabling you to access the other platforms, and through which you can access the other platforms. Do not imagine like a wallet in your pocket that you've saved the money. A wallet is not a storage device, right? A wallet is only a private key that is helping you to enable you to exchange transactions, move from one person to another person. It's maybe helping on a better trade and better use, but it's not a storage device per se, right? That's very interesting to look at it. Of course, cold wallets, the answer could change, but largely the wallet services where we have today Meta Wallet, right? We've got trusted wallets where we use it. That kind of helps me to put all the networks in it, and then help me to trade between the networks, transfer between the networks. So I think if I'm a person who is giving a hosted wallet service, the question that arises is, am I a custodian? How do I recognize the crypto that is sitting in my wallet? Right? It is considered to be on behalf of someone else, and thereby I only collect the custodian fee and recognize the fee. The actual ownership of that asset lies with the person who actually has registered for that wallet, and thereby he would recognize a crypto and I only recognize the fees. But it's not as easier, as I said, with the kind of transactions which are evolving. The depositor and custodian responsibilities are different basis how they act, what they really mean, and how the transaction is structured. The accounting also has to be derived. So that's about, I think, largely on depositor and custodian. If you're a broker dealer, right? If you're a broker dealer, it's seeming to be fairly easier because you technically are a broker who is enabling the trade, and again you get a commission, and you have to recognize the commission on satisfaction of the performance obligation. The performance obligation for you is just enable that trade. You're an agent to a customer. You're supporting him to complete the transaction. And once the transaction is completed, you get certain commission, and that commission becomes the income for you. Again, it's very easy, but what is that commission is a question, is a large question that we need to answer. And that is where the complexities in the practical world would arrive, right? How do you derive that commission? If it is also paid in the crypto, which means, is it considered to be non-cash consideration? Let's say I take a commission where I tell you that, okay, just transfer me 0.5 Bitcoin, example. Okay, that will be too much, but you transfer me 0.5 Bitcoin as a commission. What I gave services, and I got a Bitcoin, right? Now, should I call it as, because services doesn't have a value, right, per se, right? It's whatever the value that I want to call it as. Then should I say it is a non-cash consideration? That's a question one should look at it. The biggest another challenge which this industry is facing, as I already called out, is the fair value. How do you determine what is the fair value of the crypto currency or a cryptographic tokens or NFTs for that matter, all digital assets? That's where we sum up, as when we introduce you to the word of digital assets, we summed up all of this: cryptocurrency, stable coins, NFTs, security tokens, all that put together is a digital coin in the digital assets in the world. And these virtual digital assets are traded in different markets. Is there an active market? People say yes, certain times I think even 40 to 50% of the hike that they've seen in the transactions, there is an active market. But can we call that as a principal market, most advantageous market, best in use? very doubtful to say that. Nothing has been stabilized to call a particular exchange or a particular market that it is a principal market, and thereby you take a fair value that is getting traded in that market as a fair value. Very difficult to say that. And of course, it irrespective of the exchange that you use, whether it's centralized exchange or a decentralized exchange, that doesn't matter, right? Because the value of the coin remains the same across the exchanges. The fee may change, the transaction fee may change, the underlying the cost might change, right? But the actual value would remain the same. So now how do and what point of time should I take that as a fair value? These are certain questions in the market. And most important, I think what people are saying is that you determine an accounting policy choice, that at what point of time you take a cutoff and say, I will take that fair value. It's a 24/7 market. So there are industries who have given an accounting policy choice that 11:49 in the midnight, whatever is a price at which this is traded is considered to be a value for the purpose of net realizable value or fair value. And let's say at 12, if the value is different, we'll not bother about it. Right? So that's another analogy that's coming up. So determining the level of uh, hierarchy, whether it's a level 1, level 2, or level 3, depends on whether it's a quoted instrument or instrument which are derived basis the quoted price. That in a crypto world is quite challenging at this point of time, as there are no quoted market prices. So which is where you need to look at a lot more factors to determine the fair value. So these are, I think, certain points of how do you determine the level 1 fair value? How do you derive the fair value? If the entity holds a position in a single asset or liability, which is traded in active market, then you know what is a fair value. Whether the fair value should be measured within level 1 depends on what is the principal market in which you are actually doing this trade, right? Whether fair value is a quoted price, um, is whether the reporting entity has an access to the price. These are certain factors to be looked at when we look at a fair value particularly. I think I'm seeing a lot of comments on the chat. That's very interesting. I think largely this is probably what we wanted to touch upon. And I think what are the inputs that may go to determine the fair value? I would not deep dive into it, whether it's an active market, inactive market. I guess is a large question in consideration. So we spoke about accounting for a crypto holder. We spoke about accounting for an entity that accepts crypto for sale of goods or services. We spoke about accounting for depositor and a custodian. We fairly spoke about accounting for uh, the uh, the agents, the broker dealers, right? How does this entire ecosystem, they account for the crypto transaction? We kind of touched upon what's the fair value challenges that may arise. The literature is evolving. I absolutely don't claim myself to be an expert at all. Nobody can claim it. And I would not even probably call myself as advanced. I'm also a beginner in the entire journey. Of course, there could be a lot of learnings that we have to do in the process, a lot of readings that we have to do in the process, but it's just a step forward, probably a bold step, just to go and say, this is how we are understanding the literature together and trying to map the available standards today to recognize the word of crypto, right? So stable coins are fairly simpler. How do you account for stable coins seems to be fairly simple. I would say maybe fairly less complicated, as these are less volatile, um, probably not too much volatile. What volatility exists, as the price of this depends on fiat currency, which could be your local currency. Like if it's USDT, the price of that is derived from the US dollars. So not too much of the fluctuation can be expected. If it is backed by a commodity, then it is derived by a commodity. The fluctuations are lesser and it is stable, at least with respect to the coin that is being created. The fluctuation only happens to the extent of a minute fluctuations that happens on the underlying asset. So when it is a stable coin, the accounting is seeming to be at cost. You will have to account at cost. Of course, again, with it is again an intangible asset. Though it is a stable coin, it is not a tangible asset. Said that, there are countries where the government has recognized this as a currency. They're accepting this as a cash, and there is a sovereign, uh, there is a kind of a guarantee that the government is saying, I'm okay to call this as a cash. In those cases, we don't differentiate a stable coin from actually a cash. It could then get into cash, which are very few governments, probably handful, one or two at this point of time, are able to call out that we don't differentiate cash and crypto, right? They're saying it's the same. Far story for India. We'll have to wait and watch how India would take that journey once the CBDT in India comes up, right? The central bank digital currency that comes up in India, then we'll have to see how this would evolve over the period of time. So this was, I think, largely, I think, on the stable coins. Manik, I'm just thinking investment company may not be so relevant, but I think just a high level understanding. What is happening on the crypto world is there are asset management companies uh, who are who are providing an option to buy crypto as a portfolio of assets, right? So which is evolving. The wealth management industry, the asset management industry, the investment industries are now giving the option to the investors to add crypto as part of the portfolio. That means to say there is a lot of wide acceptance for people. They want to find a portfolio manager who can optimize their entire coin trading benefit and give them the maximum profits out of the trades that they generate. And with that, how does these investment companies have to account is a question. The entire background or maybe a mindset or a commercial objective of an investment company is to make gain out of the fluctuations, right? So which is how we always differentiated in a memorandum of association a normal objective and an investment objective. Even when we look at 143 subsection 1, where we talk about proprietary matters from an audit angle, we always differentiate a banking company, an investment company versus a normal company. The intention of the investment company is to make profits out of the short term fluctuations. Therefore, but natural that they say that we recognize a crypto or a digital asset broadly at fair value. So they'll not choose a cost option. They say cost doesn't make sense to me. The intention of me investing is at fair value, so I will choose fair value. Now, whether you do fair value through PL or fair value through OCI, the guidances are not stabilized. If you look at from an India's financial instrument standpoint, any asset that I recognize at fair value, a financial asset, I have a choice to do either FVTPL or an FVT-OCI. First of all, we're saying digital asset is not a financial asset. So that's kind of getting out of that standard. So therefore, we can't apply the guidance of FVT-OCI or FVTPL. That's evolving, right? So we need that kind of answer largely today is FVTPL. It's fair value through P&L as it is highly fluctuating, right? So all investment companies would recognize their crypto at fair value. So there are different parameters that they look at. We would not really deep dive, but I think that's about an investment company. They recognize at fair value, they subsequently measure at fair value, apply the guidance on respective standard, which is missing today, right? From an India's perspective, other than financial instrument standard, no other standard is giving very prevalent guidance on how to recognize fair value in the books. So we'll have to again take an accounting policy choice here. This is, I think, largely the word of crypto accounting. There are multiple considerations, maybe few points that I'll throw up that's coming up. The jargons in the industry. Certain jargons includes how do you account for simple agreements for future tokens, right? Which means, let's say you've got into an agreement where you're giving someone a right for the future tokens. Should you call it as a derivative, future contract? Should you call it as an equity instrument if you're giving them voting rights through that agreement in your company? Those are certain questions in simple agreement for future tokens, which are evolving. What is the type of an instrument? Is it debt, equity? What it is? It's a derivative. That's one evaluation in the industry. Second, whenever these coins are mined, as we mentioned earlier, that there are those airdrops, they call it as bounty drops, right? So where just to popularize that coin, they freely circulate it to few members, right? Few members in the wallet, they get those coins at a free of cost, right? It's a gift for them actually. The miner has just rewarded them with certain coins just to kind of popularize them and release them in the market. The question that's arising is that how do you recognize those airdrops? Let's say today Pramod got 10,000 bitcoins, the way I think that person in Florida got, and he kind of bought two pizzas paying those 10,000 coins because he thought he got it free, right? If I get that, then how do I recognize, right? So what should be my accounting for those coins, the airdrops more specifically? That's a second question in the industry. I think the other question that's coming up is there are startups, if you know, that they're not paying ESOPs anymore. They're not paying share-based payments to employees. They're paying coins. Right? They're just giving them the coins. They're kind of just allotting them the coins. Like, for example, Coinbase got Sika as a coin, their own coin. And all the employees of India who was, I think, on the Coinbase rule, I was reading it, it's publicly available information. And they're saying all of them actually will get 1,000 Sikas or so, right? Somewhere thereabouts. If they are getting coins, the question that arises in my hand is, I'm an employee, I'm getting a coin as a joining bonus or as a salary. Then of course, what is an accounting entry for a company? Salary debit, expense debit, right? To cash, I'm not paying cash, I'm paying to coins. Coins are going out, right? So that's kind of an interesting things which are evolving. If you're paying coins to your employees, how do you recognize? If you're paying future coins to your employees, that is also happening. Certain mining companies are saying that, okay, you stay with me, I will give you future tokens. We're anyways kind of mining it. Once I'm ready with the token, I'll give you future tokens. Now it's a liability that I created. I'm not paying you salary, I debit salary, I credit tokens which are payable in the future. What do you do with those tokens depends on what is the token all about. If it's a utility token, you can only buy certain things. You can only exchange and buy certain services and goods. Then what they're saying is, you debit expense salary, you credit future payables, you debit future payables as and when the tokens gets allocated, and you credit revenue, because eventually your company is trying to promote, right, the sale of this over the period of time, and it's nothing but a future income. So there are again those accounting complications, that how do you recognize crypto in the hands of the employees? If you are just for the fun sake transferring, today Manik is very happy that we're doing this session, so he liked that we're talking about it. He just transferred me half Bitcoin, right? That's possible. I didn't pay anything, no service is given, nothing is given, right? It's just an affection, right? Somebody just gifts you. How do you recognize it, right? It is basically a non-cash. It is non-cash, not for any services. How do I recognize that gift? Tax is very nice. I think we discussed about what taxation is saying. I don't care whatever you do, right? Just pay 30% tax on everything, whether it's gift or whether it is trade, profit, everything you pay tax, no carry forward of losses. All right, nothing is adjusted, no expenses are allowed. I think tax has gone amazingly, amazingly bold on this concept. They said just pay 30%, like other income, lottery income, right? It's not lottery, but I've actually paid my own money. But nevertheless, that's another argument from a taxation angle. But that's, I think, those are evolving questions. Many more questions I think we are finding in the industry. We're finding industries on the questions on tokenization, right? How do we really account for the process of tokenization? Basically the mining exercise. Is it R&D? Is it research and development? How do you recognize that phase of entire mining, right? How do you recognize if you've taken a facility for mining? Does that qualify to be a lease? Do you call that facility as a lease? What do you really call it as? I guess those are very pertinently evolving questions. There are answers, but I won't say these are black and white answers. These are all answers with a shade of gray. Depending on our appetite to take the accounting risk, we can move to any shades of gray, either a dark shade of gray or a light shade of gray, but it's up to me what shade I would take, but the answers are not too black and white. That's what I think is important to note. I guess this is I think all about the accounting that we spoke about. Manik, I will hand over back to you. Maybe at a very high level, we can maybe spend 5 minutes on the auditing aspects and take questions in the chat. I think we have some questions and good insights.
Sure, Asha, thank you. So, I mean, just to kind of, sum up the accounting piece and adding to whatever was discussed, the idea is, if you look at different legislations, what you should be looking at is to be drawing an effective analogy that, okay, what existing, principle or what existing set of circumstances best suit my prospective transaction or the transaction that I've already undertaken in the digital asset format. So that is how we are even looking at it. We are kind of, trying to say that, okay, it's not inventory, it is akin to inventory. It is not cash because it is not legal tender. It cannot be financial asset because it does not fall under the, overall the strict definition of cash equity or right to receive. So the idea is to kind of, whenever you get into such a transaction and are looking for an accounting principle, to use already available principle and basically use the right analogy that represents the system, the transaction fairly. So that would be our concluding comments on the accounting piece. In terms of auditing, we'll not go into much detail to leave time for the questions. The biggest area that is getting impacted are, again, our ICFR areas. So the processes and controls, the overall risk assessment. So those are the sections that are getting really a big revamp with respect to these digital assets, because the kind of processes and controls that are required to kind of initiate these transactions, maintain these transactions, or even do reporting at any period end are completely different from the traditional set of businesses. So to get into that, to get into those areas, we need to have a separate set of processes. We need to have a new set of controls that come into picture. And we also need to have a robust risk management framework, both from a management as well as from the auditor's perspective. A simple thing that we generally joke about when we discuss this, that we initially started by auditing around the computer, then we learned about auditing through the computer. Now essentially there's nothing tangible. We are auditing the computer itself. We are auditing computer logics, nothing else. So to get into that kind of mindset, we really need to up R&R teams, IT capabilities, our understanding capabilities, and at the same time, develop that mindset that the processes and controls. So earlier we used to look at the IT element of the controls or processes versus the business element separately. Now they are so intertwined that you cannot really separate or distinguish between the two elements. What you are essentially doing is you are essentially auditing a computer logic based transaction that has no tangible existence. So you cannot physically verify it. You cannot, you're dependent on everything that is built through strong computer logic to audit that. Few pillars that were there are, we talked about auditor skill and competence management, skill and competence management's integrity, specifically when you're talking about fair values and process controls, including IT. Just moving to next in the interest of time, not going in detail. Yeah. So this is one thing unique that we can talk about when it comes to using blockchain as an audit evidence. So there are data explorers, third-party block explorers that are available. So let's say your client is holding certain digital assets, and they claim that that is the fair value of their asset at a particular reporting date. You can kind of use this third-party block explorer to fetch the available market fair value for that particular asset. Few of the things to consider is that the block explorer or the third party block explorer is trusted, it is widely used, it is different from what the client is using for its own assessment. But yes, this is something that is gonna come, and it is available for Bitcoin, it is available for Ethereum, and as we progress, it is the third party block explorers are coming up for different digital assets to readily fetch the fair value in any given date and time. Okay, moving on. The assertions essentially would remain the same, but I would say, the meaning or the direction that they are making us think changes. So existence and rights being the biggest one, digital assets recorded by the entity that do not exist. The data on the blockchain may not be accurate. That is where third-party block explorers may come in. The entity did not record all its digital assets. That can be fetched from, again, the explorer's report. The entity's valuation policy is not consistent. There's something wherein we are talking about the analogy that we need to draw on the existing valuation principles. The entity does not apply it or does not appropriately determine the carrying amount of digital assets. Here again, the interpretation of whether you are treating it as a held for sale or held for trading, the similar principles that we use in the present day as well. So the assertions would remain the same. It's just our outlook of how we look at that transaction, and not having a readily available authoritative guidance that keeps everything black and white. So treading through gray by drawing analogies and kind of keeping our principles in place. Related party is one such thing that is gonna take a big change, because a lot of these transactions are anonymous. You do not really know, and it's all encrypted. So it's not that easy that you look at an agreement and you say that, okay, any transaction which is similar to the
Disclose the
transactions listed in
related
this
parties. How
agreement
do we even
would be a
disclose?
related party.
Absolutely. Yeah.
Disclosures are not available. There is companies are really struggling to find an appropriate format of disclosures, and they are the disclosures are ever evolving. Subsequent events become that much more important due to volatility, litigations, claims and assessments, income tax considerations, which are changing and just came out, and the management representations. So it will impact not just one or two pillars, but all the pillars of the existing audit considerations that we have. Now, moving on to regulatory, this is just a global landscape where you have a monetary authority of Singapore, where you have, SEC, you have European Commission, you have EBA, you have US Department of Treasury, all of them saying that, the challenges are similar across the board. There is lack of legislations across jurisdictions, no uniformity. In fact, there is no clarity even within a single jurisdiction as well. Lack of standardization, price volatility. Not spending time on this, moving to India in terms of India's journey with respect to this regulatory landscape is a very simple chain. We moved from deterrent to regulation. In 2013 to 17, the government was kind of making people aware that you should not get into this. So they were kind of using deterrents to avoid people getting into this. Then came the era of 18 to 20, where restraint came in and it was banned altogether for some time, which was later on uh, removed by the RBI through the SE order. If you just simply see the difference between the nomenclatures of the bills that are proposed by the government, earlier it was banning of cryptocurrency and regulation of official digital currency bill, to cryptocurrency and regulation of official digital asset currency bill. So there's a paradigm shift in terms of how the regulators are even thinking in India about this. And now we know with the budget, 30% tax, withholding tax, gift to be tax and everything. So digital rupee coming in. So the shift
So the
over the
question,
past 5 years is
exactly.
completely,
Gone.
different.
And the question people are asking is that just because it's recognized in the budget, does it give a legal status? Of course, we know it doesn't. But Manik, I think I really appreciate the point you mentioned that the whole mindset of we calling it as we ban it, it's not allowed to. We are accepting it and trying to get to a regulation, taxing it. This all shows that these are all steps towards adopting this economy, right?
Exactly. Yeah.
I guess already this was, I think, very large with the global regulatory guidance. Just to sum up, I think what we wanted to just touch base here is uh, what really is the word of digital asset. It is evolving. Most of the time we use the words like kind of, maybe, it's evolving, it's missing, this is not there. But just to collate what is not there is also, I guess, a lot of effort to find out where we are heading towards in the overall world of digital assets, and which is what we tried doing. This was a significant research by a lot of team members. In fact, I take that probably a second to thank all our team members who put together this document. This was just created from a scratch and not really was readily available anywhere. We took a number of months to get to at least the step-by-step word of what is digital asset, what is the ecosystem, how do you account for it, and what is the audit considerations, and what is the regulatory regime. So that's kind of where we wanted to give an overall view to all the members. And we hope this was beneficial for the members. And I see certain questions. And Alam Professor, it's really nice to have you attending this session, and a lot of questions I think we would see. We'll try answer again. I would not really call that all our answers could be right or wrong, but these are all interpretations, views that we can express. The one question that we have is whatever is traded in the market should be considered as FMB, which is right. But the point is, if I'm buying now, let's say at 7:58 p.m., I bought a currency at X value. Tomorrow, what should I recognize? Subsequent recognition is a question. And subsequent recognition, the fair market value is changing. It's constantly changing. So at what point of time, let's say I bought it on 1st January, 31st March, what do I call as fair value? That's the question that we're trying to address, and even the entire industry is trying to address. And to your point on, should I take only 1149 IST? No, that was just one of the examples some of the industries are using, but they're using different ways. They're taking average of the prices, they're taking morning to evening average, right? So they also have their own AI or ML built platforms, which is kind of telling them what could be an estimated price, right, for tomorrow, depending on how the trade is going today. So the guidelines of what should be fair market value is not concrete, not crystallized, but it's an accounting policy choice. To your point on, can I just take the transaction value as a fair market value? Yes, absolutely. But which point of time the transaction value you consider as fair market value? If you're doing a subsequent recognition, that becomes an accounting policy choice. And seeming that most logical choices are acceptable, unless until it sounds that someone would say, no, I bought it at, let's say, $10,000, and I would only recognize at $10,000 because that's the price at which I bought, then it is always at cost. Then it's not at fair value. So that's where I think the question would come into consideration and logical conclusions seeming to be very acceptable to the entire world. But fair value is a question of consideration in the Bitcoin world, right? So I hope I could answer that a bit. Yeah, 11:49 IST or word time. This was again just an example. In fact, there are companies who have called out this in their accounting policy. They're clearly saying that the end of the day for them is basically 11:49 p.m. Right? Their respective local time, and that is what they will consider as a rate at which it is traded. And we call it as pairing, right? It is pairing. See, the point is, why is it not monetary? That's another question Alam Prabhu sir has, that why is it not monetary? Monetary is fixed and determinable in cash, right? It has a fixed and determinable value. A Bitcoin is neither fixed nor has a determinable value. It fails a monetary asset concept. So now, is it non-monetary? Not commenting about it. Is it cash equivalent? Let's go to AS3, right? With Ind AS 7, cash equivalent is a highly the definition of cash equivalent is it is liquidated with a very less, right? And the chances of you recovering the value that you invested is very high, which in a Bitcoin world I cannot say. Yesterday I invested, let's say 20,000 was a dollar, and today it's become 30,000. Day after it's become 12,000. With the volatility, it cannot be called as cash equivalent, which is what is a strong view of the entire market and as well as the IFRS committee also. In the white paper, they're calling out categorically that it's very difficult to call it as either cash or cash equivalent, as me recovering that with a very insignificant risk of value, I cannot prove that unless it's a stable coin. So this may hold good for a stable coin. Then it could get into foreign exchange fluctuations. There was one question that we had, I guess Lakshmi has this question, that can it be called as foreign exchange trading? Again, when we say pairing, right? So pairing, there's one coin I pay to buy another coin. Both of this is represented in the coin price, by the way. These are not cash values, right? Today I cannot say that I paid $10,000 and I got Bitcoin and I sell Bitcoin and bet $10,000 back. That is not possible. So hence foreign exchange transaction is excluding it. And it's universal. It is decentralized. How do you even know which country are you trading this with? Right? Sitting in India, I can trade the coins across the world. That's probably certain restrictions do exist today, depending on I think the networks that you use, and certain regulations still exist for me to not to venture into few coins, but those are all more protective, I would say, from a regulatory standpoint. But we cannot today say that it is X currency to Y currency. It is maybe represented in dollars, probably because it's more acceptable currency, right? But if I just change the feature in my account to rupees, everything will start showing me in rupees. If I change it to pounds, everything will start showing me in pounds. It just doesn't have a proper denominated value, right? So that could be the reason why calling it as foreign exchange trading may not at this point of time hold good. I think this is largely the questions I think we could answer. So we answered monetary asset, we answered foreign exchange, we answered accounting policy choice. Largely I think we're good. Manik, do you think anything else?
No, I think yeah,
missed out?
we are good. There's one request for using, having another session. Definitely, thank you for that.
Practically on blockchain, we need to bring a blockchain expert who can actually demonstrate. Of course, I think that's possible. There are sessions Institute had on the blockchain, and there are experts who are available who can demonstrate with use cases. We can also, I mean, I can also make an effort to find someone who is actually using the technology and understands the real essence of the technology. But that's definitely a great suggestion. Yeah. All right.
Can conclude? Madam, we can conclude. Hello.
Yes, we can conclude.
Yes,
So that's all
please.
from our side. Thank you so much for patiently listening to us.
Thank you. It was a great session, as our past chairman Alama Prabhu sir said. You have tried to cover too many aspects because it's like chasing a bull run. Too many aspects, too many laws is covered in that. Definitely, it's required an entire day session, I think. I don't know, it's going to be reality or virtual, that digital currency, how far it will get succeed, something. But still, I can say it is an imagination of a person who is investing, and though just view, each person has got a different perspective on digital currency. It's not like if you say rupee, okay, fine, we can understand it. There is no common language for this digital currency. I think it take still more time to be stabilized, I feel. And it's like a bring it to the particular legal perspective, maybe DT or IDT or legal, any legal perspective, bring it to the common law parlance is a bit difficult, I feel, because country to country also it's a very difficult to bring it to the common parlance. I think it will go in imagination only for some more time, I feel. But still, seeing your slides and efforts, really great, great time have been spent, I think, on this, sharing your valuable time for sharing your knowledge. Really, I thank on behalf of Bangalore branch of ICA for excellent presentation and time for sharing your knowledge. Thank you. But in subsequent days, we can have a full day session or something, or we can, in this
We
only,
can
we can
bifurcate
make it
into
as a
topics and do it.
topic
Sir,
wise.
right?
If you do it, it will be good, I feel.
I think the interest of getting to topic wise comes when you see the vastness. That's what I think the
No,
objective
more
of
than
this was to
200 members
introduce to
have
the
been
ocean.
virtually attended this program. It
Yeah.
shows the interest of the members. We can take it in a large scale, and we have to do it topic wise. Then it will be reach to the members, I feel.
Thank you so
Really, I
much.
thank Asha madam and Manik for bringing out with such a beautiful topic. Thank you on behalf of Bangalore branch office here. I also thank all the members who actively participated and made this first virtual programs very successful. Thank you.
Thank you, sir,
Thank
for
you
the
so much
opportunity.
for listening to us and the opportunity.
Thanks everyone
Thank
for
you.
listening.
Bye.
Thank you.